Three, two. All right, we are live.
What's up, family?
What's going on, everybody?
What's up? How's everybody doing?
It's another Sunday, another Rams win, but we're not gonna touch on that too heavy. AJ. I'm gonna let it slide.
Please.
We're gonna brush past that and get to the money. But we appreciate y'all tapping in with us, man. It's another Supplemental Sundays. Last week we had an economics episode. I hope y'all checked that out. It was a lot of good information on basic economics. So if you've never taken an economics course, you have no idea how economics relates to the stock market. That was a good starter video to get your feet wet. This week, we do have our cousin Dave, OG cousin, get the work done cousin. Call on him, cousin, and he gonna show up in 5 minutes. You feel me? This my guy right here, man. He came to double back on the economics. He's gonna go through the narratives and just a little bit deeper into how the economics works related to the stock market. So we definitely appreciate him showing up. We always got AJ with us. She's somewhere in the background, even when y'all don't see her, because she's a knowledge seeker. You feel me? And she my right hand. So you got a problem with AJ, you got a problem with me. But she here today. She's gonna go through some things with us to get us right to start off the year, because tomorrow is the first trading day of the year. So I know 2021 did not treat people like how 2022 treated, or how 2020 treated people. So we got to get our minds right for 2022 to make sure that we have a profitable year and we change some lives this year through the wisdom, through preparation, through discipline. Feel me? AJ, did you have anything before Dave go ahead and get started?
No, I'm not gonna lie. It's gonna turn it up a notch. So we doing something a little different this season. I'm excited for this one. So we're gonna let Dave hop right in.
I bet. Narrative
All right,
economics.
Dave, the floor is yours. We're not gonna take up no more of your time. Go ahead and take it away, bro.
I appreciate y'all. So narrative economics, right? An experience through economics and how compelling stories impact the investor's decision, right? So I'm Dave Fenelus. Y'all can follow me on my handle at dfenelus1. And you know what? Let's start with a disclaimer first. Now, I am not a financial advisor, nor am I an economist or a psychologist. I'm just some guy named Dave on the internet who took the red pill, right? And I'm going to provide you with my perspective. My background is in industrial engineering, automation, robotics, and what I really do is solve logistic issues for large corporations as far as their transportation and their warehousing and so forth, And this right here is really just for entertainment and educational purposes, right? So I really just want you to kind of not only just see the data, really understand it, and I'm not just going to regurgitate it back to you, but I really want you to experience the data, right? Really understand how you can initially, intuitively recognize how narratives impact the economy. So if y'all ready to go down a rabbit hole with me, let me know. Now, a good story, and let me start with this. Well, stocks are similar to homes. Now, what if I tell you that you found a house, beautiful house, really great interior, really good, just square footage, perfectly way that you designed it, you were actually architected by scratch. And it was underpriced, let's say 80% lower than a comparable house of its size, right? Sounds cool, right? But check this out. Here's a caveat. What happened to that house was in a very dangerous area, probably the most dangerous zip code in the country or the world, right? You dodging bullets every time you go outside. Ain't no grocery store nearby. The nearest supermarket is like 2 miles away, 3 miles away. You living in the middle of a food desert, right? The water is contaminated. The electric grid is failing. Your neighbors, they suspect. The house down the street got boarded up. Is boarded up. The other house down, burned to the crisp, right? Yeah, you have your house is beautiful and all, but that neighborhood is a hazard. It's a risk. Would you put yourself out there, or would you flee to safety? Right? Just because something looks like it has a good price doesn't necessarily mean that it's true good value at that time, because the sentiment might not be there. So what you want to do is you want to risk off, right? But how about this? What if I tell you that, well, if you within a year or two, right, there's a new administration that coming in that community that's going to clean it up, right? They're going to have more police and they're going to tackle crime. There is a budget to fix the road and the infrastructure. There is a supermarket that's about to open up, and restaurants and community schools about to get good. You got kids. But now that house that was 80% low now is going to get caught up to value once the rest of the neighborhood actually catches up. So that environment, what that is the economy. And the house is just an asset, like a stock. So if you think about this, and another example is a company like JD.com or Pinduoduo or maybe Alibaba took a hit. Good company, great financial balance sheet, solid when you look at it from a management standpoint, generate revenue and earnings. But the problem is, why was those stocks took like a 60 to 80% hit last year? Because the economy, the sentiment and the risk that was associated with China wasn't there. So the reason why that stick was because of narrative. So let's talk about what economic narrative is in this essence. So now, one book that I'm going to reference throughout the entire presentation is by an economist named Robert Shiller. Now, he's a Nobel Prize winning economist who came up with the breakthrough of economic narratives, right? And he basically, in his book, said stories that are contagious and that affect human judgment about economic decision. That's pretty much what the book is about. So now, the reason why that's important is because as I want everyone to reflect on what happened in 2020 and 2021, because narratives truly do stimulate certain action and response. It's the emotional power that basically allows you to just hit that trigger figure, right? So let's break it down a little bit further and figure out what narrative economic really is. And I highly suggest everyone to actually pick up that book. So there's two different type of really like behavioral narrative economics. So you have the narrative economics and then you have behavior economics. And even though narrative economics has been around for a bit, it's transformed. The definition has actually transformed over time. And we'll get that in a sec. So now, behavior economics tends to be like a pattern of human economic behavior grounded in psychology, right? Right. But the narrative is basically the story that fuels that behavior. So that their narrative basically influences the behavior of people, right? So they kind of go hand in hand. So now, what's really good about Schiller's book is that he compares these narratives like a disease, and he really pulls from epidemiology, or the study of infectious disease, to really see why some diseases go viral and some diseases actually basically extinct. And a really good thing about this is think about narratives as rumors. You tell somebody it catches up like wildfire, right? So again, people are, and because it catches like wildfire, we don't become immune to it. Most people don't. They usually follow narratives and then run with it. So it does feed human decision. So let's think about it, right? So it can spread. And when you look at it, you got to think of from epidemiology standpoint, there is contagion rate and there's recovery rate. Now, how does a virus become a pandemic? Well, that's what happens when the contagious rate, the rate that it spreads is faster than the rate that it takes for people to recover. So then it's spreading faster than people can recover. Thus, it becomes widespread like wildfire. A story can be like that too. Good story, bad story, but narrative. So let's say a story goes out there and it spreads out until that story actually gets debunked. Let's say like either the narrative changed and it can be validated. It will spread and spread until it changed before it actually gets proven otherwise, right? So I want everyone to think about it is like that rate that a story can spread and how fast it's spreading, right? So when you think about these narratives and these stories, think about them like a disease. Okay. So now why is that important, right? Why is that these stories are sticking, right? What makes certain narratives stick and others don't? Just like what makes certain disease become viral and become a pandemic and others don't affect at that same rate. Well, it's because good stories actually do basically channel and a response or stimulate within us to our like our needs, right? So now think of this like some of the human basic needs, right? That we're trying to stimulate a response. There's that physical need, that basic needs such as food, water, shelter. You know, when people flee to safety, right? They really assess when there's a lot of fear going on in the market. They flee things they don't understand or things that, and they really channel that basic human needs, like consumer staples, right? And the reason why that's a risk on, risk off is because people are basically understand like, hey, I need these basic needs. So I want everyone to kind of think about Maslow hierarchy of needs. Again, is basically just different levels of what people need from their basic to survival to, hey, we can live by, but it's not that nice. Such as more morality, self-actualization. There's societies that provide people with physical needs, such as North Korea, and there's societies that, but they don't have the same type of creative freedom that we have, such as in the United States or, Singapore, and so forth. So again, these narratives stick because they allow you to kind of get you a certain response. So let's continue. So how to really truly define narrative economics really comes down to, there's two definitions. 1893 was basically just dictation, writing a narrative of what the economy, it was like a recorded history of economic events. That was what narrative economics was in the past. Like I said earlier, with Shiller, it's more about the study of popular narrative, trying to understand why stories and theories stick and impact economic dynamics, right? So a narrative would stimulate a response. Again, I'm going to keep iterate this until it really sticks. Now, there's certain different type of narratives, and he breaks it down in his book. Really understands why things are to understand why things are contagious and how they relate to the economy. He goes in about constellation narrative, which is basically just grouping different narratives together, right? So they can understand, hey, why certain stories stick and how they stimulate a response, and why some don't. Confluence of narrative is basically joining those narratives together and understanding why and how those narratives can evolve or influence one another. Okay. And then most importantly, he makes an attempt and a stab at trying to quantify the impact of narratives to people's social economic behavior, right? Or basically to socioeconomic behavior that drives economic policy that impacts the economy and sentiment of what's going to occur as far as people being risk off or risk on, as far as the landscape of the overall investment, right? So if things get risky and there's a lot of uncertainty, people won't invest, right? So that is the reason why narratives kind of come together, because they do impact people's emotional response to whether they want to do something or not, right? So data really can measure and tell narratives, and that's really what I want to understand. But data can also be manipulated, right, to actually feed a narrative. So there's two things here, right? And I can say this is like clickbaits. How certain clickbaits will go or viral, such as hit pieces. Hey, someone will say, Tesla recall 500,000 cars, and that'll be clickbait. So people think that, hey, Tesla's a terrible company, they're having issues, and then the narrative will spin saying that they're going to continue having issues. This is just one recall after another after another. So it's the beginning of a lot of issues down the line, thus spewing fear. Okay. But what makes that company different than, let's say, a recall from GM or Ford or Toyota, which actually happens all the time? Why does one narrative or one headline actually sticks and the other doesn't? What makes Tesla, like a Tesla recall, very different than a recall from Ford, right? Why does one go viral and the other's like, man, what's going on? Like, who cares? That's what we need to understand, right? So now, one thing that Shiller also said in his book was that people often have nothing to say when you ask them about their overall objective and view about life, but will talk your ear off if when it comes to telling a good story about someone else, because story sticks. People like stories. Stories have moat. Since the dawn of time, we've always shared stories. So let's understand different type of areas where we actually receive stories, right? Or narratives that impact our behavior. So marketing, yes, when you get that ad, you see that commercial, it just makes you pump, it stimulates you, like in the 80s with Michael Jordan, his commercial, It Must Be the Shoes with Spike Lee. That stimulated a response saying that, hey, listen, it must be the shoes. I'm going to go out there and I'm going to buy Jordan so I can start playing like Michael Jordan, right? That is that is an example of narrative economic, right? The narrative is, hey, if you buy the shoe, right, or from a marketing standpoint, if you buy the shoe, you will be like Mike. Be like Mike. That's why that went viral, that statement. So that's one viral. Journalism, whether good or bad, whether credible news or fake news, can go viral and lead to a change and adjustment in behavior, such as people drinking bleach. Fake news that went viral and people acted upon that. Now, yes, we're going to sit here and we're going to say, like, why would someone do that? Like, what logical person would actually do that? Right? As we reflect, well, people were doing that because they were part of a time of heightened fear. So during a time of heightened fear and uncertainty, we're more susceptible to respond in a way that we normally would not have. So that's that journalism, that narrative that feeds from journalism. Narrative can also be fed through education. But the reason I highlighted education on this one was because education can actually provide you with the insight to challenge narrative, right? Because now you have information that you can use to kind of peel back the onion and understand, hey, if this is valid or not, right? So education, the more educated you are in a certain subject or a topic, the more that allows you to evaluate whether that narrative actually is credible. There's health intervention narrative, philanthropy, and also law. And I'm going to say law is this one. Laws also are a very big stimulate as far as people to behave. So let's say that a law is going to pass, such as seatbelts. Well, people weren't really buckling up seatbelts, even though they were available in the late 1960s and 70s. People really weren't forced to buckle up seatbelts while driving until there was a law passed that basically change that behavior, causing people to buckle up seatbelts, right? So essentially, I want everyone to really ask why and understand and try to make the connection and be aware of what's going on as far as narrative, right? So let's go a little bit more into that. There are 9 common recurring economic narratives that's out there, right? These are stories that just get regurgitated over and over again from one generation to another, right? You'll see these cycles. And if you live long enough and start paying attention up, you will start seeing the same thing. Panic versus confidence, frugality versus extreme consumption, gold standard versus biometalism. And let me pause here. Today we have cryptocurrency. In the past, hundreds of years ago, even thousands, we had gold, silver, copper, all these different precious metals that were actually used as currency. Everyone thought that a new metal was going to deplace and be the new gold standard. Thus the word gold standard, right? That phrase. So now we have Bitcoin, Ethereum, Cardano, all the way down to Dogecoin. Think about that narrative, right? Here's another one. Labor-saving machines replace many jobs. That's the one that has been around for hundreds, if not thousands of years, right? Labor-saving apparatus. Automation and artificial intelligence replacing all jobs. Real estate boom and bust, stock market bubbles, boycott proliferators, and evil businesses. And of course, the wage price spiral and evil labor unions, right? So people live their lives as they're fulfilling a story, right? And it really changes their motivation in a fundamental way. This right is very important to understand human thinking and society, to study and understand how they influence the economy and market fluctuation and volatility. We need to understand how people's thinking changed over time to truly understand the market. One experiment that Shiller did, or actually talked about in his book, was there was a beauty pageant experiment, right? And in that experiment, newspaper basically did a survey, bunch of pictures of women, and they basically said that pick the top 20 women that they found their readers found attractive, right? For a prize, right? Or so what people did, and it was like, I think pictures of like 60, 70 women or something like that. And it was supposed to pick the top 20 or top 10 or top 20. And what in the control studies, what they found was that people didn't pick the pictures or the contestant that they thought that they believe and felt was the most beautiful. No, they actually picked the contestants they felt that other people will believe were beautiful, right? Let's pause there for a second. Their idea of beauty was based on what they believe other people will believe were beautiful. Now, the reason I'm unpacking this is because, like the stock market, some of us pick stocks that we believe other people will pick. Speculative. Okay. So narratives fuel reaction, fuel behavior, but you have to understand the psychology and really basically connect that with the stock market. Now, other narratives that we do hear a lot is crisis, right? So economic crisis, whether it's stock market crash, economic bubble, bank run, inflation, health crisis, currency crisis, unemployment, recession. Again, every time we hear these terms, people stimulated to, oh, there's something going on with the world, right? And they keep rearing their ugly heads every single generation, I said, right? Now, what would have happened if the recession of 2020, right? Just hear me here. What happened if we can replay time, go back about 2 years? Now, we see that we see the surge of rate going on. We're paying attention to China. We understand, hey, oh, there's a pandemic coming, and we're better prepared for that, right? So we had the medical infrastructure to handle the surge of cases. We had the right equipment, the right tools to address the pandemic at the source at the beginning, globally, whether it was testing, whether it was vaccine, whether it was pills, whether it was masks, was sanitation equipment. Imagine if we had that. Would we have had the lockdown? And if we didn't have the lockdown, how would the stock market would have performed? How would the economy would have performed if none of these events actually occurred? I know I'm playing Monday morning quarterback right now, but this is really important why we need to pull from history, because these events actually happened in the past, different pandemics and how it impacts the market, such as the Spanish flu in the early 1900s. So again, start thinking them through. If we're better prepared, certain events might not happen, right? So why did the pandemic happen to the extent that it did? Why did it sell off and rebound? Why did people panic? What can history tell us? So now we're going to go to the rabbit hole. Check this out. Again, this is from Shiller's book, How Stories Go Viral. This graph right here actually shows you basically headline articles of the Great Depression from 1900 to 2019, right? Now, so look at this. We're peaked here. See my cursor? So we got the 1970s. Pay attention to dates, and I'm going to review them later. 1970s. We have the 1980s, late 80s, like 87. And then we had a peak during 2008. And again, right at the pandemic, or actually right before the pandemic, actually 2018, during the inverted yield curve. Now, why is that important? That is important is because people start drawing connection to the past to try to figure out what's going on. And sometimes the past can actually appear worse than they really are, or better than they really are. But what I know that is that people started inundating the market and the headlines with Great Depression, Great Recession, end of the world, doomsday narrative, right? So why? It's because they want to stimulate a response. So let's take a look at this. So 1920, crash, Great Depression. These are images here, right? So notable was 1970 hyperinflation. We got the dot-com bubble, the financial crisis, like you mentioned, and the coronavirus pandemic. So here are some of the articles that happened during those times. How do you feel looking at these images, right? We got one image right here. Why can't you give my dad a job? Or how about this? Remember Y2K, January 1, 2000, the day the earth will stand still? Damn, 22 years later, here we are. We got the massacre in the market, 1987 crash. We have Wall Street blackest hour, right? Wall Street in panic as stock crashes, 1929. Panic, right? Look at all these headlines here. How do you feel? You'll sell too. Or how about this one? The internet may be a passing fad as millions give up. Or how about this? Empty shelves. Or this. I've seen people drive hours to pick up sanitation wipes and toilet paper. Hours during the pandemic. That's going to be in the history books. So how's your heart rate right now? Did it elevate? Did you feel something? Because these stories and images are powerful stimulus that fuel an emotional response. So here's another one. Technological unemployment, right? Labor-saving machines. So labor-saving machines, the idea actually started peaking. And basically this is a chart that shows the percentage of total words. So the words labor-saving machines as a percent of total words available, and the words technological unemployment as a percent of total word available. Check this out. Labor-saving machines, just to pick reference from history. In the late 1800s, there was a peak in industrial revolution of labor-saving machine, right? And it just kept going up, narrative going up. Look what happened in the Great Depression, technological unemployment. Actually, one of the reasons for the Great Depression was, and why people can't find jobs, was because a lot of businesses that were able to, that had the money, were actually using machines to compensate the wage of the person, of like a human being. Think about that. So then what happened was that there was not the skills, they didn't need the skill at that time. They were able to survive and still produce and so forth with machines. Why did I mention that? Because of the great divergence of skills and labor. There's that story. That story basically is what's going to fuel people's response. So now Albert Einstein, and here's a narrative that we need to be familiar with just to recognize, is he said that according to my conviction, it cannot be doubted that the severe economic depression is to be traced back for the most part to internal economic causes. The improvement in the apparatus of production through technical invention and organization has decreased the need for human labor and thereby caused the elimination of part of labor and economic circuit, and thereby caused a progressive decrease in the purchasing power of the consumer. That was the narrative during the Great Depression, right? Well, the reason why it's important, because that narrative shows up several times again. How about there? The government needs to adopt its primary mission, managing the economic transition that automation will bring. We are way behind the curve and need to catch up, right? Automation is going to displace labor. And we're seeing that a little bit right now. Or how about this with Elon Musk? There will be fewer jobs that a robot can do better. I want to be clear. These are not things that I wish to happen. These are things I think probably will happen. And if my assessment is correct, and it probably will happen, then we have to think about what we're going to do about it. I think some kind of universal basic income is going to be necessary. Now, universal basic income, that's a physical policy, right? To fuel the economy. So now people are going to be displaced with, so the story is that people are going to be displaced with jobs because of robots, and their skills aren't necessarily going to be a par for anything else. So because they're technically unskilled and there's no jobs for them, then they're going to need some type of basic income to still be able to survive, right? Now, you give them income, then they start spending. It goes back into the economy, businesses starts making revenue, make earnings, they can pay back loans, etc. History don't repeat itself, but it sure rhymes. And we as investors need to be conscious of the past to recognize reoccurring narratives so we can focus on solution and not be emotional. That's where the connection really comes. So, but check this out. It was said, again, like I said, 1,000 years ago, like Aristotle actually said this. If every tool, when ordered and even to its own accord, could do the work that befits it, then there would be no need either for apparatus for the master worker or the slave of the lords. So he's basically saying there is no need for anything if machines can do what they need to do. The reason why I mention it is because I want people to understand the narrative that we're going to be seeing going forward, right? What happened? People want to start working, but business already adopted and say, hey, we're going to use machines. What's going to happen then? What's going to happen in the economy? What's going to be the fiscal policy, right? And if people aren't able to purchase things, then will that physical policy change, right? And probably influence monetary policy. Now, hold up. You're probably saying, all right, whatever. Why should I care? right? Why should I care about narratives? Why should I care about understanding data and understanding what's really going on? Well, it's because you're actually not getting, unless you actually look at the data and you can actually evaluate those narratives, you're getting somebody else's interpretation, right? So again, the narrative is fuel to get you to think and be stimulated, right? To react, to read, clickbait, to grab your attention. Well, why? From the news is to get viewership. It's to get people to read. It's to get people to watch. So then they can actually push advertisement towards you, right? Some of these, then why the reason why people are more prone to react over fear is because fear is that reaction that kind of just, or that shocking factor that sticks in our head. And I think we can all relate to that. Again, I want everyone to reflect about 2020 and 2021 and be prepared what's going on in the future. So let me break this down from more of a rotation market standpoint, right? So we got sector rotation, right? And market bottom to market top to market bottom again, right? Contraction and expansion. And this is something that Quill and Norville did a fantastic job last week breaking down. So I won't go too diverse too further, but I do want to talk about the psychology of the market. Really understand hope, optimism, euphoria, anxiety, denial, panic, really, and how that actually compares to these different market cycles, and the reason why we need to understand what's going on. All these movements, these various, and it just basically tells us, are we fearful or are we, hopeful, right? Right? Because now people are hopeful, then they will be able to invest more, and they invest more and they purchase more. That will stimulate the economy. People are fearful, then they will be less prone to invest, less prone to splurge, which will stagnate the economy, right? So why do narratives stick in the market, right? Well, market hates uncertainty, to be honest with you. And that's why when there's uncertainty, we see extreme fear. We don't see extreme greed during uncertainty, but we see the opposite, right? Man, make the connection. Because it's human nature to generate stories when it comes to the great unknown. And we like stories that stick, and stories that stick tend to be the ones that shock us, to be honest with you. And whether it's, a pandemic, whether it's, a business going, running out of food or health, or running out of money, those things will impact people's and investors' behavior. So what is some example of fear in the market? An emotional stimulant. We got FUD, fear, uncertainty, doubt, big one, right? So with fear, uncertainty, doubt, people tend to they tend to get scared, right? And sell off because they just don't know what's going to happen. And then there's another fear, right? Fear of missing out, where people chase because they felt like, hey, they're going to be left behind, right? That's the psychology of trading, right? And what this does, it kind of taps into our non-rational part of our brains, feeding off our emotion. Right? And I'll be the first one to tell you that I've actually fell for these myself multiple times last year and the year before. Multiple times did I chase something, a fear of missing out, even going against my best judgment, going against what the charts tell me, going against what I believe about the sector rotation or the seasonality of the company, or maybe even the valuation. I still fell for that. I think we can all attest. And also FOMO. I chased stuff as well, and I sold things when I shouldn't have. Shoot, I sold my AMD 140s January 2022. I wish I didn't, but I did at one point. I took a hit. Best believe. And that was because I got fearful. I didn't trust the thesis, right? I went with a narrative and I didn't validate that. So now we need to understand, like, all right, cool. How do we not fall for the okie doke, right? How do we not fall for someone else's narrative? How do we determine our own thesis and really stick to that? Well, Mark actually gave us this little gem in the form of signal noise confirmation, right? So we got a signal, and I'm going to break this down. A signal can be multiple things, right? It could be a stock hitting key level, like whether it's a key support or resistance, or of an order block. It can be like a stock consolidating, like candlestick patterns such as a doji, a sign of indecision, right? That's usually means like there's something coming, right? It's a signal. It could signal of a possible trend reversal, right? Inverted yield curve can be a signal as well. It can be a correlation of a different trend is about to occur. Those are signals, right? But a signal can also be a stock hitting a moving average, like a 200-day moving average. But that could be meaningless in the grand scheme of things, unless you really understand, all right, what's the narrative behind it? What's the momentum that will drive investors to make a decision whether they want to buy or sell or hold, right? Then that comes the noise. The noise is the narrative that you get fed, right? It is basically, can signify a stock, basically, selling, it can be an article hit piece. It can be like, hey, supply chain issues are going to cause issues for Tesla, right? Because of chips shortage, right? Right, that's a noise. Noise can also be supply chain issues also will impact a company like Nike because there's some issues as far as manufacturing and they can't be able to produce. They can't even be able to produce. They won't have enough inventory on hand to sell, which means they can't generate revenue. If they can't generate revenue, they can't generate earnings per share, which is going to impact the investor, right? So that can be also narrative as well. That's again, the supply chain narrative. We experienced this last year, right? And we're actually still experiencing it right now. A narrative can be the coronavirus, right? The Omicron variant actually is going to impact us in a way that we're going to have extreme death lockdown. So now people are afraid that we're going to be locked down again, right? So what they do, they sell off. Even though it's been proven or been studied in South Africa that this variant is not as strong or as dangerous, so there's no death. Yes, we're going to experience a cycle where basically the hospitals will get hit and inundated. We understand that, true. But does it justify for the doomsday narrative that the world is going to end, we're going to be locked down, right? That can be signified noise, right? Noise can be a phenomenon, not a reflection of the overall market, but it can just be market sentiment, can be something that influence the behavior of investors. That's noise. Now, confirmation, baby, confirmation is exactly what you need to do. Confirmation is going directly to the source, right? And understanding and validating what is going on in the world. A trusting source, right? Whether it's the company, government, industry, directly that actually proves or disproves the narrative that's playing out in the media or society. So those are signal, noise, and confirmation. So what we as investors need to do? Well, we need to think logically, right? We need to do something what we call like conditional based trading, right? Or event-driven investment. This is actually a strategy a lot of hedge funds uses, basically to understand and exploit different inefficiencies that may occur before or after an event, whether it's a corporate event, such as an earnings call, bankruptcy, merger, acquisition, spinoff. So basically they're hedging their bets, yes. But we, the come up cousins, what we like to do is we like to buy time, right? So what we want to do is if we know that thesis is strong, so we already review the company's cash flow, we review their balance sheet, we understand that they're mo, we understand their seasonality, we understand all that, right? But the historicals, we were connecting the dot. And then we say, hey, if A happens, then B happens, then C happens, right? Again, if this, if that, that is the conditions that we need to be set off. Nothing else. Nothing else. Not that blah, 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 end of the world. Nah. And we just basically wait and give it time for it to curate, right? So that will better allow us to understand when to buy, truly when to buy, when to sell, when to hedge, and when to hold. And most importantly, why, right? Again, compelling, solid thesis that cannot be broken. Okay. So here's a story. So let's talk about different narratives, right? Now, some narratives can actually drive good and positive change. Now, here's a question I really want everybody to really think about. The financial crisis give birth to or the growth of fintech. Yes, PayPal was developed in 1998, but the Bitcoin white paper actually was written about cryptocurrency right after the financial crisis. Square was founded in 2009, Venmo 2009, Stripe 2010, right? Article in 2009 came out talking about time to cash out, why paper money hurts the economy. Talks about why we shouldn't trust banks and why we need a trusted ledger, hence cryptocurrency. So interesting that narratives sometimes can be self-fulfilling prophecies, because the narrative will actually state a problem, and then somebody will go out there and put an action to actually do something about it. Investing, right? So let's look at today. What is the narrative around cryptocurrency today? Just a question. Just gonna move on. So again, there's a lot of noise going on in narratives, whether it's good or bad, but what comes out of it is solution. So let's talk about solution, right? So this is the S&P 500, basically, stock market from 1872 all the way to right about 2019, or actually no, Q4300, Q2 2020, all right? Yeah, there's no one's a lot of up and down, had a Great Depression, but over time, we actually kept pushing higher and higher. And when you look at this, it actually gets steeper and steeper. So the recovery is actually faster, is becoming faster than the actual drawdown or the pullback. What do I mean about that? Let's see. Now, here is the last, let's say, SPY since 1993. This is a yearly chart. And what I could probably do is tell you all these different issues and look how fast we recover out of these problems. So first we are at, let's do the 2000s, right? So we had a dot-com bubble, September 11, right? And we look at each one of these candles represents a story, represents a narrative, right? So 2000, right? Dot-com bubble, September 11, and then basically we're at war with Iraq and Afghanistan, right? That impacts the economy, that impact the market, because a lot of investors were fearful around that time, right? Right out of that, we started recovering, okay? Things are, but it was tight. It wasn't as robust as it has been in the past in the 90s, right? So as you can look at these candlesticks, and those that know candlestick patterns, you can kind of see how the ranges are very tight. Almost looks like a doji, almost looks like an indecision. When you look at this, you say, hey, listen, I probably shouldn't be investing. Something's going on. But what was actually occurring at that time was the narrative of subprime loans on houses, right? And how eventually banks will have to deal with that, with credit issues. Lo and behold, in 2008, that's actually what happened. Boom, stock market crash. And we basically gave up gains almost a decade worth of gains, actually. Even with the pullback from the dot-com bubble burst to the 2001 to 2002. Why is that? That's crazy, right? Like when you look at the chart from a grand, like bigger picture, you can kind of see, oh, okay, there's a narrative. Like this is not just candlestick pattern. It's actually a story, right? And let's look at what's going on forward. All right, so we got a little pullback, a flash crash in 2011. In 2015, I think we have election turmoil. Things were kind of getting stagnant at that point. In 2018, we had the China trade wars. People were given a narrative of the next Cold War, right? And how that impacts the economy. I mean, just getting, again, basically pulling back stories that were in the 1980s, right? About the Russia Cold War, people were beginning to think, hey, that's going to be us in China. Again, basically cause investors to act and react, right? So, and then you see the recovery. Even with the pandemic, if you look at 2020, even though it looks volatile, we still recovered pretty well. Why did we do that? Well, technology. In the 2000s, we got killed because of technology. And we kept improving technology over and over again since 2000, 2001, 2002. 2008 financial crisis, we came up with better policy, right? Tightening up monetary and fiscal policy so to curb any type of issue as far as drastic sell-off. And then we had a president that basically tried to control the narrative, tried to keep us at bay, keeping investors' sentiment pretty much pacify. So then they can continue to stimulate the economy. Narrative and stories basically sparks a revolution, sparks action, sparks people to do so. So what will drive consumer spending? Available liquidity, confidence in the market, confidence that they're not going to spend their last dollar, confidence that they still will have their job tomorrow, confident money will continue flowing in. Norville said this last week, and it really stuck with me, he said, if you had your last dollar and your best friend wanted to borrow it, right? Would you lend that to him? What happened if you win $1 million the next day? Would that be a question? Would that be an issue? That is exactly the psychology behind that, right? Behind the market. We have liquidity. Of course, we're going to invest because we're not worried. We're in a euphoric state, right? We're not fearful. We're in this fear. We want to sell out. So we need to understand that there's a correlation. So here's another thing, another question I have for you, cousins. Why is the stock market, and I'm sorry, pressed it too early. Why is the stock market, right, recovering faster now than it has in the past? Because it's evolving rapidly. The stock market of yesterday is not the stock market of today or the last generation, right? In the 1960s, the average company in S&P 500 was established for about 60 years. Today, it's about 15. In the early 2000s, 20, 25. Again, there is a disruption going on in the market that's causing it to evolve and shift, right? And I want people to think about evolving and shifting, right? When we look at non-foreign payroll, well, we're thinking about why it's no longer part of economic studies and data. Well, it's because the economy is very different than it was before. We're no longer an agriculture and farming economy, right? We're kind of a service, consumer-based, technological type of economy. So over time and over generations, we need to shift and change policy to address that, right? Newer companies are changing the landscape of market cycles. Well, market cycles are actually occurring quicker, right? So I want everybody to kind of say, all right, this is a market cycle. Why is a market cycle occurring? What is the narrative? What is really going on? Is it really the end of the world? Or are we going to be okay? Are we going to get through it? And what have we done in the past? What happened during the Spanish flu? What happened during the Roaring 20s? What happened during the Great Depression? Really start asking if you want to connect the dots, right? And because what's occurring right now in the future is that we're seeing technological innovation, right? Speeding up market cycles, basically speeding up because they're developing solution to problem. People are selling off because there's a problem, there's a fear. Technology is coming and saying, hey, listen, now there's no fear that we're good, we got a solution. So people then become, confident again and start investing. The stock market can actually be a very speculative sport. Now, here's another one here. Now, a question for everybody here is, who are the targeted audience for these narratives? Now, really think about it, right? And I'll tell you one thing. If you look at this is from Visual Capitalist, and it kind of shows the different generation and what their basically percent of the economy, right? So baby boomers are still 43.4% of the economy as far as holding up money, right? Then you also got Gen X, but millennials are still a small part, even today. Like, we don't have that, not necessarily that purchasing power, we don't have that economic power to move the markets just yet. So when you hear these narratives and you're saying that makes no sense, what's going on, right? Well, the reason why that's not, because you're not that targeted audience, because what they're doing is they're pulling stories from history, right? And they kind of amplifying that, magnifying that, right? So that's the reason why we need to understand, like, what's a narrative and who's the target of that narrative, so that we understand how that react appropriately. So last thing I'm gonna do here is we're gonna do an exercise. And Tivo, AJ, you cool if I can rock for another 10 minutes? Good?
Do your thing, bro.
I bet.
Yep.
So I really want to talk about like how we validate what's going on. I kind of gave you the landscape of what's going on, but how do we validate, right? So we had previous discussions, right, through other supplemental Sundays about earning report and large cap stock, like how to actually validate what's going on, how to check, how to read the reports. Well, we can read a balance statement, we can read a cash flow, right? So we understand if a company is being impacted by some of these narratives impacting their bottom line, right? CPI talks about inflation, but here's a question for folks. Would inflation really matter to the extent, growing inflation will matter if the GDP actually outpaces inflation? They talked about GDP last week, so I'm not going to review it. But imagine if the economy is growing faster, right, than inflation. Would that matter? What's with the narrative? What if I tell you that technology, like, can actually fuel better, more, and outpace growth outpace the growth of inflation by solving some of the issues that are driving it, right? So right now, I'm going to take a moment. It's gonna be weird for me. And we're going to go through how to actually validate some of these reportings. And let me see if I can swap screen. All right. So everybody see the this Bureau of Labor Statistics?
Yep.
All right. So what we're going to do right now is I'm going to dive in this real quickly and kind of show you what data is available that you can go out there and you can just say, validate, hey, here's a narrative. Narrative is that, the economy is getting worse. Well, let's try to understand what's going on with the economy, right? So first, we'll talk about inflation, consumer price index. Here we go. So this is the U.S. Bureau of Labor Statistics, very good as far as economic data here. And they kind of break down what's the driving of CPI, consumer price index here. And what we recognize is that energy actually is the biggest driver of inflation. Okay, energy. And we kind of can look into its energy commodity. So it's the actual supply of energy. So the cost of it is actually driving, the price of everything going up, right? Reason why energy basically drives with
Hey,
higher
real
energy.
quick, Dave.
Yep.
Can you like zoom that in? So you might have to scroll to actually see. Yeah, there you go. Appreciate that.
Yeah. So when we look at this, energy drives transportation. Transportation basically is the way you can get goods from, around the world. And as transportation cost goes up or supply chain issue happens, well, then eats into your operating margin, right? It eats your ability to actually, keep your margins basically expanding. So you're compressing your margin. You compress your margin, right? And good for shareholders, because that means your earnings per shares are going to go down. So what companies have to do is they're going to have to pass that cost along to the customer to basically, right, pass that buck to that customer so that they can actually still keep their margin, right? So they can actually meet their guidance. That's essentially what it means. So that's one type of economic impact to a company and to investors. So here's the question I have for everybody. Is the price of energy inflated, or is it transitory? Yeah, put that in the chat. All right, so that's one thing I want everyone to pay attention to. Another thing really is the unemployment rate. And here, we kind of we'll do this. We'll go to one of my favorite websites to actually look at things. Shameless plug. I mean, I'm not endorsing that. It's just easier for me to break this down. I like Forex Factory, and what I do is I pull up at a glance the entire month, and it has a nice little ledger here. And the ledger basically tells you different events. Remember, we're conditional traders, right? We're events-based traders. We want to understand, hey, different things where we can get confirmation. Confirmation, data releases or statement releases is our confirmation say, hey, that whether the sentiment and the narrative actually matches what's really happening. So high impact stuff, right? Red, orange, medium, yellow, low impact stuff, right? Green, it was better than expected. Red, less than expected. Okay, cool. So what I do here, I like to go through all these stuff that's in red, right, on each one of these days to understand, all right, how are these going to impact the market, right? So like OPEC, I want to pull this OPEC one real quickly. The reason why is because this is going to impact inflation. Why is it going to impact inflation? Because it's going to impact energy. What OPEC is the Organization of Petroleum Exporting Countries, right? And what they do is they basically determine the supply available for petroleum energy going around the world, right? Lower supply, higher demand, sometimes higher the cost price. Increase the supply, you increase the supply, then you can actually lower down the cost, right? So you see that? So the more supply there is, the more inventory there is, the less, it's going to be worth, essentially. So
Hey, zoom in, bro.
Yeah. So that's what that is. And that's why that's important, OPEC. So here is where we're going to basically get some validation of, on this date, is on January 4th, we're going to get some validation during this meeting is what is going on as far as OPEC, all these OPEC nations. Are they actually going to increase their supply of oil, or they're not? And if they do, are they going to adjust the prices for oil, right, commodities, or is it going to come down? What's the price of a barrel? And then if they increase that barrel cost, then how's that going to impact the economy, right? This is straight factual stuff. It's not narrative about transportation. No, this is like, all right, here is we dig down and we see what are the true drivers in inflation. Another driver of inflation, right, is something called the CPI. And I'm going to pull the CPI report right now for y'all. And in here, they release every single month. And if you look at this calendar here, CPI is actually coming out next week, I believe. PPI. Yeah, next Wednesday, the 12th. So what we typically have, and so now there's a lot of speculation. There's a lot of narrative out there because there's a lot of unknown. People don't know what the CPI numbers were last month. We can speculate what that is based on week over week inflation numbers and so forth, but we really don't know what that number is. So there's going to be a lot of narratives leading to this until we get confirmation, whether it's good or bad, right? So once we get that confirmation, then the market will be able to react normally, or then we'll have chop or volatility, right? Chop happens because there's indecision. There's a tug of war between buyers and sellers, and they don't know where to go. So we're going to go through the CPI real quickly, and we're going to, again, understand what is the narrative that's causing inflation. Again, so we look at this, and we want to understand, one, this is a question that we need to ask. And the question needs to be, is price flat? Is inflation flattening? Is it regressing? Or it's accelerating, right? That's it, right? And then you also want to keep in mind GDP growth. So when we look at this, all items, we see actually month over month, yeah, when it came from July to August, September, and we were anticipating a correction, right, in September. We were waiting for a correction, right? We were waiting for it. We were going to say, hey, the correction was going to happen. There was going to be a pullback, and there was going to be an opportunity to buy put against the market and ride it back up. And ironically, that wasn't what sold the market down, to be honest with you. The reason why is because when we look at CPI, we saw CPI was actually the increase of the rate of inflation was coming down, right? Even September was kind of normalized. So we decided, oh, well, prices are slowing down. We're not in hyperinflation. Maybe the Feds don't have to actually act at all because now it proves that inflation is transitory or normalizing, right? So that is that. And then what we can do is kind of dig further and really see what are the biggest drivers of inflation here. Now, what sold the market off in September was Evergrande. It did. What happened with China and folks being over leveraged, that's what sold the market off. And so the market doesn't react because you think it's going to react or because the narrative is going to react. No, it's waiting for data, right? There is some finite information that's basically it's going to say whether this is we buy here, we sell, like whether the economy is strong, the economy is weak, the economy is growing, the economy is regressing. That's it. That's all investors really care, economists care about. Why? Because it impacts that sentiment that banks have to lend money, right? It all comes down to lend money in businesses. You lend money to businesses, business actually generates some product, service, or good, and that drives the economy. That service and good is going to be available for consumers. Consumers are going to purchase it, and it just goes down in a nice little closed loop. So that's the reason why it's very important to kind of understand these data and kind of look at yourself, filter throughout the noise, and really go and see like, all right, what's driving this? Now, what we see here is that, yeah, the inflation peaked in September, October, but why did it peak in October? This is based on September too, right? Well, what happened to inflation around this time? Well, we had the surge of the Delta variant, right? Coming back, resurgence there. So there was a little bit of fear. Also, there's the whole narrative, people not wanting to go to work, health and so forth. And then there was also narrative. Remember, these are stories that we've saw and we've heard. There was also the narrative of supply chain issues, right? So what people were doing was they were panic buying, increasing demand. So what a lot of businesses did was that they paid premium on transportation. Instead of going ocean liner, they flew their stuff over. Expensive, more costs, right? Higher costs. Again, from a business standpoint, that higher cost they're going to have to pass to the consumer. They pass to the consumer now because the price of good is going up. Of course, the price of good is going up because, again, that whole cycle, right, is because we're trying to protect profits, or we're trying to protect margins. We're trying to keep afloat in that bay. So now the question that we have to ask ourselves is that, hey, is price going to come down or normalize right after, when everything is said and done and normal, right? Let's say that we come out of this pandemic, right, and everybody's cool, everybody's good, things are open, everything's back to normal, right? Is price going to eventually come down or just stay flat and not grow? And if that does happen, is that going to just monetary policy, right? The Fed's ability to control rates, and is that going to impact physical policy, right? Basically, government laws and rules that are basically of how money is, or businesses use money and so forth, or how they allocate funds and budgets and so forth. How that is going to work, right? So again, that's the reason we as investors need to go through data and really ask these questions. Asking these questions are really going to tell you, hey, what is going on with the market? So again, real important. These are basically why we need to question. Here's the data, and we need to find the trend. And what I did when I went to the report, I went month to month and said, what is the trend? What's normal? Actually, let's look and give an example of CPI here. Let me pull up CPI. Month. And what I'm doing here is I'm just kind of looking at forecast and actual and kind of see what's has changed, right? And what I want to know is kind of look at seasonality. What is the biggest growth? Why is the biggest growth? What's the underlying story that feed all these going on? Once you understand that, you can kind of connect the dot and pieces to understand what to invest in, right? And then the ultimate question is my investment, my portfolio, my stocks, my assets, are they going to be shielded by any of these short-term volatility? Like, what's the expectation? How long is it going to take for us to get through this? So lastly, I got a little something for everybody. Homework. Yeah, I'm not going to leave you in a cliffhanger right now. I want everybody to understand like what narrative fueled price action, for what type of narrative is going to fuel price action this year. No, seriously, like really ask yourself, what narrative will fuel price action this year? And I want you to try to quantify the impact of that narrative to the overall stock market, right? So if inflation is X, what is going to happen to the stock market? Inflation doesn't grow at hyper rate, and it is transitory, and the Federal Reserve decides to adjust their rate hike. Instead of adjusting rate hike 3 times, they decided to do it 2 times. Then how is that going to impact us, right, on the stock market? And what you can do is just go to history, go Google what happened in the past. How did the market reacted when the Fed increased the rate hike? What percent? And then I want you to understand how to quantify that, the impact of that narrative to your portfolio. So what is that relationship between your stock, right? Because we're thinking risk on, risk off. What's that relationship between your stock to the overall market, right? And also just for seasonality. Because here's the crazy thing. Mark and Joel Lynn already planted the seeds. Check out that in timestamps on Reddit. Really, it's in there. Everything I said tonight is not new. They planted seeds, and right now I'm just hoping to water your imagination, really make you conscious of what's really happening, right? I want you to be aware and think logically, right? And assessing risk and validate for yourself whether or not these things, these stories and narrative that's being painted is truly going to stick. Do they make sense? And how they're going to impact us. Now, the easiest thing you can do is wait it out. Go long and just say, hey, we're in a cycle. You know, the market's been recovering faster and faster every time. All right, I'm gonna go 2-3 years out, leap, sayonara, live my life, right? This is why, so I want everybody to understand that 2022 is going to be choppy, right? It's going to seem choppy. Right now, there's a lot of narrative noise going on. And I want you to be prepared and have a plan. Really start thinking conditionally. Start thinking about market cycles. Start thinking about what is going on, because this too shall pass. And lastly, I'll be remiss if I ain't shout out, these some resources, but I wouldn't be remiss if I ain't shout out Shahib, right? King David, Oliver, Joel, Quill, and Norville for what they've done these last couple of weeks, because it all ties together, right? Balance sheet, cash flow, right? Then we're looking at biometallism, which is like cryptocurrency, to what's going on with the macroeconomics and the GDP and the inflation and so forth, to now understanding how stories kind of impact all of that. Because stories impact consumer behavior, impacts investor sentiment, and that is going to impact the entire economy, because then people are now not going to spend. They're going to hoard, and the economy is going to be stagnant or regress. And when that happens, there's no growth. So stay woke, everybody. That's my presentation.
Filled with gems as usual. Appreciate you, bro.
No problem.
Show this man some love in the chat. So this is the thing, right? Me and AJ put this together to make some cohesive material for y'all to have, a playlist for y'all to have that will be able to break down, like he said, all of the concepts that have already been presented to us. I know sometimes when we watch the videos with Mark and Jolene, that it's so jam-packed that it's hard to pull all the things and the tools that they present us with. So we're doing this right here to give us time and give us specific, detailed episodes to break all of these things down so that we can learn how they learn, so that we can learn beyond them, so that we can learn together. And, you know, it's still people that ask, you know, oh, hey, I want to be in the Matrix. How do I get in the Matrix? Or do y'all have a course? Or how do I get mentored? These type of questions, that's the reason we do these videos. I promise you. Everything that's in the Matrix it's like super fast paced. If you go back and watch the last 2 supplemental Sundays that we did, you'll learn everything that we went over in the Matrix pretty much. 90% of the information that we went over was based upon economics, and we'll probably have even another economics video for y'all. But these, if you go through these videos, I'm telling you, you watch them, you take notes. That's my son right there trying to be nosy. But you watch them, you take notes, you pay attention to what Dave did, to what Quill did, to what Norval did, to what the previous guys did, to what the ladies are going to do in the future. Because we have more stuff coming. We got some technicals coming where we're going to learn supply and demand. We got some more metaverse Web 3.0 stuff coming. We got pretty much all February is ladies lined up. That's going to give us some whole different type of stuff that we ain't even touched on yet. So shout out to them. Y'all know who y'all are. But really though, watch these videos and break them down, because when I tell people stuff, I do not try to be rude. I try to listen, and based upon that, I try to give back to the cousins or organize something for the cousins to answer your question and everybody who has a question like you in the future. So I do not want this to go to waste. I do notice that some of the videos do have lower views, but I still get asked questions that were in them videos. So if you know somebody that struggles with these things, we're trying to present different voices than just Mark, to be able to comprehend some of the language and the tone of the information, because we know Mark, he get in AI mode. Sometimes I can't understand him. I'm like, Mark, chill, slow down, bro. Like you you talking like you on Siri voice right now. Like, we need some human interaction. You know what I'm saying? So I'm not trying to ramble, but I'm just saying that this type of stuff is very, very important. Not only to the community, but to those behind us that's following us, that want to learn from us. You feel me? But on that note, thank you so much, Dave, for breaking that down, for not just, you got to start somewhere, but you really picked up the baton and took it to a different place. So we definitely appreciate you for that. We're going to show you all the love in the chat and the comments. They've been giving you love the whole time. You had the views going crazy, bro. So that's a salute. That's more power to your work. I'm going to let AJ wrap it up and give us the knowledge that she want to give us for the week and for the start of the year.
Oh, yeah. So I was going to tell y'all pay attention to the Tesla quarterly updates, but they went ahead and hit us with those. So shouts out to the thesis that Mark has blessed us with. We saw 936 plus thousand deliveries total for this year. So that's amazing. So I'm curious to pay attention to that going into this week. Let's talk about earnings. So for earnings this week, we got Bed Bath & Beyond and Walgreens. Those are the most notable this week. Not too much going on in the earnings space this week, but both of those do take place on Thursday. So just pay attention to those. I also wanted to highlight, Dave mentioned OPEC, right? So he talked about OPEC, and so you can run this back, gain some little bit more knowledge on how to apply the results from the OPEC meeting, but we will have that meeting this week on Tuesday. So be on the lookout for that, right? And make sure you're understanding how to utilize these economic numbers and data that they give us in your trading plan. We also have JOLTS, all right? So for those of you who don't know about JOLTS, that's your jobs, openings, and labor turnover survey, all right? So that kind of gives you more insight into the jobs, force economics and all of that good stuff. So pay attention to not only OPEC, but JOLTS this week. Also, those are both on Tuesday. Wednesday, you have the FOMC meeting minutes, okay? That's for November. So you'll be able to look at and see the meeting minutes for November. Oh my God, there's my cutie right there. You'll be able to see your meeting minutes for November, and that comes on Wednesday, y'all. Last but not least, December job reports. All right, we're gonna get those on Friday. Everybody knows the infamous 8:30 in the morning. So make sure you're on the swivel and you're paying attention to that. All right, going into the new year to see if we had some progress. And the thing that I am looking forward to the most, everybody knows this is CES Tech Conference Week. All right. This is going to be a fun week. It's January 5th through the 8th. For those of you who don't know, although there are some people that have canceled going in person, we're still looking to see some big things and some innovations, especially coming out of the chip and EV space. So like I said, with Tesla's deliveries dropping, and CES this upcoming week is going to be a fun and interesting week to follow and pay attention to. Also, don't forget that CES also highlights some of the consumer retailer technologies as well. So you be on the lookout for some of your technology highlights from your Walmarts and your Nikes, Dave. Your CVS's, things of that nature. All right, in the retail space, because technology exists there as well. But that's pretty much it for this week. Like I said, it's a new week, so make sure you're sticking to your plan. Follow price action, keep your head on the swivel. Nothing's guaranteed. So with that said, just keep doing your homework. Like we said, we are putting these together for y'all to make sure that you're actually going through these videos and actually applying them, so that you're actually getting the practice that you need and taking those shots in the gym, so that this becomes second nature to you. And then, like I said, always take the time to explain it to somebody else. If you could teach it to somebody else, therefore you know it. So those are some of the challenges that I also give you for homework this week. Not only learn the info, but teach it to somebody. Help retain the info. But other than that, that's all we got. I wish all of y'all a great week.
On the weeks.
That's a fact. And when I come back to rewatch this video for myself, I expect to see answers to them questions.
No,
What are the narratives that will fuel price actions for this year?
2022. That's some real questions.
Quantify the impact of a narrative to the overall stock market and quantify the impact of a narrative to your portfolios. If you can understand those three things, a lot of the mistakes that happened to you in 2021, a lot of the losses that happened to you in 2021 will not happen to you in 2022. You might take some different losses, but that means that there's a new lesson to learn. It won't be them same economic lessons or them narrative lessons or them fear lessons, FOMO lessons, all them ugly lessons that, you know, a lot of us, including myself, I took a loss on AMD that I should not have taken. You feel me? Because it was a long, drawn out process of FUD. It wasn't just, you know, a month, you know, you got shook out in a month, you know, you soft. No. AMD was like a good 9 months. It was like a pregnancy with AMD. You feel me?
That was like my premium went from $6 to like some 50 cents type
stressful one. You feel me?
Yeah,
like,
that was hit different.
You ain't know if the baby was gonna pop out looking like you or not type of stressful one. You know what I'm saying? So this you can answer these three questions. You good on that part. You good on that part. That's another notch in your belt. We could change your color belt now. You're not a white belt no more. You might be orange. No disrespect. I'm not even gonna get into the colors because I might say something disrespectful. But on that note, y'all, we appreciate y'all tapping in, man. It's 2022. Be wise tomorrow. If you still getting your plan together, do not trade tomorrow. Do not trade until you have your plan in place and you know exactly what you're doing to a T, from entry to holding to exit to average down, to cut it loose, all of that. Do not trade until you have that down pat. AJ or Dave, did y'all have anything else?
No, that's a fact. Because if you got that trading plan and you understand your thesis, I mean, that's the biggest thing I learned from Mark this past year was, I mean, if you stick true to your thesis and you believe, can nobody take you off your square. So no matter what the narrative may be, if you understand your thesis and you believe in the data that supports it, hold tried and true. You'll be good to go. So,
Dave, did you have anything?
Yeah, just pay attention to stocks beta. I want everybody to go to Investopedia and look up beta for a stock, so then you can understand a relationship. I'm dropping it to y'all. The relationship between a stock and the overall stock market when it comes to risk. All right, so y'all read that. Y'all go to YouTube, look up videos, really understand that, because when we go risk off or risk on, I mean, it's going to get real. So check that out. And then also for all the Haitians out there, actually for all of us, happy Independence Day. Bon nuit. All right. Take it easy.
Take it easy.
All right, y'all, man. Y'all be good.
Happy New Year's.